Many of my clients are first-time home buyers needing guidance with the home buying process. In this video, I will provide an overview and what you should know and how you can plan for your first-time home purchase, from establishing a financial plan through closing on that home. Having this information before starting the process will reduce anxiety and maximize the enjoyment that comes with purchasing a home. Brand the Mortgage Man here, and I've helped more than 10,000 home buyers over my 22-year career, putting me in the top 1% of loan originators nationwide. So let's get into it. Step one, you really want to understand your why. You want to clarify your motivation for wanting to buy a home, right? Before getting swept up in the process, right? Maybe you're renting and you think it's time to buy, you've saved up some money, or you're living with family and it's time to get out of your family's home and you've decided it's time to buy. I would suggest making a list of pros and cons of the home buying process versus whatever your current residential status is, whether it's renting or living rent-free, whatever the case may be. Step two, you want to do some financial planning. It's important to have solid financial plans in place before you go ahead and move forward with the home buying process. You want to determine your budget. You're going to want to use things like online mortgage calculators, get a general idea of what payments look like. You really want to be able to understand what the down payment requirements are depending on the type of loans that you're going to be looking at. Conventional loans that require a little as 3% down for first-time buyers. FHA, 3.5%. USDA or VA, no money down. You want to do an example calculation of the down payment and purchase price. You want to know what closing costs are going to look like, right? You can watch some of my videos on closing costs and the overall costs of buying to get a better idea. Then I highly recommend you do, because I don't expect you to know that information. But check that out and go through and get a better understanding of what you should expect to pay on top of your down payment when you're buying a property. I can even provide you information in those videos on where you might be able to find some down payment assistance programs that can actually cover the down payment, leaving you responsible for just the closing costs when you're buying a home. Step three is going to be finding a lender. Now, you can find them online, but I recommend looking at different types of lenders, determining what's best for you. Mortgage broker, local bank, a credit union, direct lender. I'd even recommend applying with multiple lenders so you can compare rates and terms. You have a 45-day window where they can have your credit pulled for them, or you can have your credit pulled for a mortgage, and it's not going to impact your score beyond the initial inquiry. So keep that in mind. You can use resources like a referral, of course, Zillow, Google, Realtor, right, in order to determine what lenders you should be speaking to, or do your own research. You want to check out current rates online. You can check them out on the CFPB rate checker before contacting lenders, just to get a general idea of where rates might be. Just keep in mind that the rates you see online won't always necessarily match what a lender can offer you, because your specific scenario is going to determine what the rate's going to be. So definitely consider that. You also might want to watch my video on rates, why rates vary from one lender to the next. I think it will give you a little bit of insight on why you're going to be quoted different interest rates, although you have the same scenario, but different interest rates from one lender to another. And you want to compare lenders based on their interest rates, based on their fees. I would definitely consider their responsiveness and customer service. I wouldn't just necessarily base my decision on getting the lowest rate, because that might not be what's most important in the transaction. Step four would be getting pre-approved. So you definitely want to get pre-approved. Pre-approved means that you're actually going to provide all of your documents up front, have your credit pulled, and the lender's going to do a thorough review of everything to let you know what you qualify for. This is going to, for one, tell you that you're qualified, and two, let you know the amount you should be qualified for and the price of the homes you should be looking at. You don't want to just go out blind to start looking at properties and then find out that you either qualify for less or more than what you've been looking at. You don't want to fall in love with a home that you can't purchase. So get pre-approved first, then go out and start your home search. You're going to want to have things to provide to the lender, such as pay stubs, W-2s, bank statements, a copy of your driver's license. As I mentioned, they're going to pull your credit. If you're self-employed, definitely expect to have to provide your tax returns for both you personally and for your business if you file business tax returns. And you want to submit those documents to the lenders, allow them to do their job. When they pre-approve you, they give you a general idea of what interest rates look like at that point in time. But just keep in mind, most lenders aren't locking in an interest rate when they pre-approve you. You typically don't lock your interest rate or secure the rate itself until you've gone under contract for a specific property and have a set closing date. Step five is going to be to find a local real estate agent. I recommend doing this after you've been pre-approved. Sometimes you might have one leading into it because maybe a friend referred you to someone and that realtor might tell you to go get pre-approved. However, if you haven't already gotten a realtor, step five would be finding one after you're pre-approved. Most realtors are going to want to know that, hey, I'm working with a borrower who took the steps necessary to determine whether or not they're qualified to buy before we go out and start looking for properties. Especially as the market becomes more competitive, they're not going to want to be submitting offers on properties for someone they don't know actually qualifies to buy the property, and a seller on the property is not going to be accepting offers from someone they don't know qualifies for the property. I recommend working with a realtor who's only representing you. I don't recommend working directly with the listing agent who has the seller's best interests in mind. I really recommend finding an agent that's going to represent you as the buyer and only you as the buyer. And you want to choose an agent, in my opinion, that can explain things clearly and it seems genuine, not just sales oriented. And I wouldn't base it strictly on the amount of time they've been in the business. business, that doesn't always mean that they're gonna be the best for you, right? The amount of time that they've been doing something doesn't make them better at it, right? So you wanna find the person that you feel best suits you and what you're looking for. I would definitely use your gut and trust your gut when you're selecting an agent. 6, here's some home shopping tips. For one, your agent should set you up on a search with the MLS, multiple listing service. I recommend looking there and marking properties that you find most interesting or best suit your needs. You wanna stick to your pre-approved price limit. You really don't wanna go over that too much because not all sellers are gonna be willing to come down in price, and you don't wanna get your hopes up only to find out it's not gonna work out for you. You wanna create a needs versus a wants list, right? What's most important to you? And you don't wanna rush and get overly attached to homes. You wanna be patient and methodical. 7, making an offer on a property. So once you do find the right property, you wanna put your offer together with your realtor, but you wanna consider terms outside of just the price. You wanna think about the closing costs. Do you wanna ask for some sort of credit? How long the inspection period is gonna be? How long the loan approval period is gonna be? You need to coordinate that with your lender, right? Within your contract, and you should watch my video going through the Florida contract, but one of the parts that you wanna look at in that contract is gonna be your loan approval period. And once you surpass that loan approval period, if you haven't provided the approval, your deposit that you're gonna give up front when you go under contract is gonna become at risk. So you wanna coordinate with your realtor and with your lender to make sure that you're putting together terms that are gonna work for everyone, not just you, but for the lender, for the realtor, and for the seller of property. You wanna write an offer that's really gonna be compelling and communicate your interest to that seller. And I highly recommend this, and that's gonna be to ask your lender to call the listing agent on the property when your offer is submitted to really explain what the process was for vetting you as a borrower and how thorough they were up front. Because something to keep in mind, not all lenders follow the same process when it comes to pre-approving someone, and some lenders just pre-qualify, meaning they don't look at any documents. So by having your lender call the listing agent, assuming they did a true pre-approval as I mentioned, and letting that listing agent know that was the process and showing that listing agent that they're gonna be available throughout the process, communication is key, and that's gonna hold a lot of weight in helping your offer get accepted. It's something that we do, and it's something I highly recommend any lender that you're working with offers. Step 8, once you're under contract for a property, is gonna be a home inspection. The home inspection is gonna look for underlying issues with the properties, and my suggestion is this: every home, whether it's new construction or existing, is going to have some sort of issues. I recommend focusing on the major issues rather than minor repairs, okay? You wanna use that inspection report to negotiate potential concessions with the seller unless there's items that are in dire need of repair, right? Broken AC that needs to be replaced, electrical issues that need to be taken care of prior to getting insurance on the property. But if there's other things that don't necessarily need to be repaired but bother you, you can address those concerns with your realtor, have them address it with the listing agent and the seller, and oftentimes you can negotiate to get a credit from the seller to cover the cost of those repairs, but you can use that credit to cover your closing costs. And you wanna understand that home inspectors will reveal some significant issues that may affect your decision to even purchase the property. So it's extremely important to have a home inspection done, although it's not required for a home purchase. Step 9 is gonna be an appraisal on the property, and this is something that the lender is gonna order for you. The appraisal is gonna determine that the amount you're paying for the property matches what the home is actually worth based on its market value. An appraiser is gonna go out to the property, they're gonna look at the home itself, they're gonna pull comparables, meaning properties that are like the one you're buying, in order to determine what those have sold for and if the home that you're buying is worth what it's being sold for. If there are comparable sales that have sold for at or around what you're paying for the new property, it's likely that property is going to appraise. There are times when properties underappraise, meaning they come in less than what you're under contract for. And in those cases, your realtor will need to go to bat for you with the seller and their agent to try to get the price of the property down. Step 10, the underwriting process. This is something that happens with the lender. Now, you went through the pre-approval process up front, you provided documents to your loan officer to review and issue your pre-approval letter. However, the loan officer, loan originator, is not the decision maker on the loan. The underwriter is. The underwriter is the one who knows all of the guidelines and is going to take all those same documents plus some updated ones along with the appraisal on the property. They're going to review everything as a whole, and they're going to come back with a list of items or conditions that need to be met in order for them to issue the final approval on the property. This is normal. It could be an explanation of a job gap. It could be the explanation of deposits showing on your bank statement. It could be updated pay stubs. There's a multitude of things that an underwriter can ask for, but at the end of the day, your loan is going to go through the underwriting process, and the underwriter is going to be the one who issues the approval for your loan, not pre-approval, and that's going to allow you to close. Now, once you get to the closing process, you're going to get something called a closing disclosure from your lender. It's going to break down all the final numbers for your loan, for your purchase, and for your loan. Now, this should match your loan estimate, which is the document you got early on in the process after you went under contract and started the mortgage process with your lender. This is after pre-approval. This is strictly once you've gone under contract. Everything should pretty much match unless there were changes to the price or you made changes to your loan amount or something that you requested to change. However, those numbers should be very, very close to each other. So nothing should be a surprise once you get to this document and you're reviewing it. However, you need to get that document at least 3 business days prior to closing. You need to sign and acknowledge it so that you can close on time. Next is your closing, and at that point in time, the lender is actually gonna release the funds, which is your mortgage, to the title company, and then the title company is handling your transaction, is gonna go ahead and release the funds to all the necessary parties involved with the transaction, the seller, the realtor, so on and so forth. So these are the steps that you wanna follow and understand when you're going through the home buying process. And if you want details on anything that I just mentioned, make sure to subscribe to my channel because I have detailed videos on each of these subjects where I get more in depth and you can learn everything you need to know for the home buying process. So if you find this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages, and make sure to leave a comment below if you have questions about your own scenario. I reply to 100% of the comments left on my videos.